Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about. Firstly, Apple's unveiled its new iPhone 15 along with its other variants of that phone. Along with that, the Republicans have launched a new inquiry into Joe Biden and his relationships with his son, who has some dodgy dealings apparently. As well as that, the EU has voted on increasing its renewable energy targets for 2030. And along with that, stay till the end of the video because there we'll be talking about the new Bitcoin opportunities as well as dollar opportunities on the charts, along with some new inflation data that's coming out today, which will have a pivotal impact on the markets. But moving on to Apple, let's talk about it. So firstly, Apple unveiled 4 new iPhone models and 2 updated watches in Cupertino on Tuesday, so yesterday. Now, pricing for the new iPhone 15 Pro Max models will start at $1.199 to $100 more than a year ago. And so we're seeing this increase in the higher end models price wise. Now the pricing, the Pro and the Pro Max, are the first smartphones with 3 nanometer chips made by TSMC. Now all 4 of the models now use a universal USB-C charging port, and as well as that, Apple has also introduced the Series 9 Apple Watch, which starts off at $399 and is Apple's first carbon neutral product. Now we know a lot of these kind of technology brands, along with other brands within the space, have been trying to push for these kind of more green focused products, removing certain materials from their production and also reducing waste in production. But this is kind of Apple's first real product to do with being completely carbon neutral. We know there's been issues to do with Apple's environmental policy in the past to do with its production in China, and this is kind of Apple really trying to make a move away from that. If you watched the event live, you saw that they were pushing this message a lot, and as we'll speak about in a second, they've also removed leather from their products to do with the Apple Watch. So throughout the Apple event, as I said, Apple touted its environmental credentials, saying it would no longer use leather in any of its accessories, with this change also lowering the carbon footprint. They've also changed the way the boxes kind of work so they can stack more, and they'll only be shipping these watches rather than using air transport to lower the carbon footprint. Now, this event also comes at a challenging time for Apple, considering it's the world's most valuable company, yet revenues have actually decreased for the last 3 quarters. So declined, sorry. Now, this is, however, in tune with the global smartphone downturn being experienced by all of these companies, including Huawei and Samsung, and this is likely to do with the global kind of cost of living crisis that many countries have been experiencing as a result of a global increase in interest rates, as well as troubles within China. Now, the next quarter will ultimately be the most important, encompassing the crucial holiday shopping season, that being Christmas. And so we'll really see then how this iPhone will have an effect on consumer habits as well as spending to do with Apple. And so whether Apple can succeed with increasing its revenues greatly during this time will kind of play greatly into how the Apple stock will be valued on the market. Now, as I talked about with Huawei, they have just released a new flagship phone that threatens to actually dent Apple's market share, because as we know, Apple does have a very strong market share. However, it has issues in certain emerging economies which they have less presence in, and so with Huawei kind of making a greater presence on the international stage, it'll be interesting to see whether this new model coming out of Huawei can also damage Apple's sales. Now, as I spoke about before, problems in China also meant Apple's shares fell more than 5% in the days leading up to the event, with many kind of worrying how that might affect the supply chains to do with Apple. But moving on from Apple, we'll come to them at the end where we'll have a look at the stock. So stay till then, and we'll do some analysis on the chart in relation to that. But next, we should talk about the Republican House Speaker launching an impeachment inquiry into Biden. Now, Kevin McCarthy, the Republican Speaker of the House of Representatives, has launched an impeachment inquiry into the US President Joe Biden. Now, this has, of course, deepened the country's political turmoil in the run-up to next year's election. Now, we know, US politics has become more and more divisive over the years, with figureheads like Trump, as well as more far left figures such as Bernie, kind of creating this large almost Cold War era like divide within the country in relation to its politics. And so this is kind of what we're seeing here now. Now, we know Trump's been impeached twice whilst in power, and many are kind of seeing this, especially on the progressive and Democrat side, they're kind of seeing this more as just a revenge attempt by the Republicans to try and get one back at Biden, who kind of was a part of the Democrats which pushed for, impeachments against Trump. Now, as I said, well, not as I said, sorry, but this came as a result of increased pressure from allies of Trump to target Biden. Now, we know there's certain figures within the Republican House and also the Republican Senate which do have stronger feelings towards Trump and stronger allegiances towards Trump, and also on the inverse. However, these, more allied party members are more kind of pivotal in the Senate and the House, and they can kind of use their status with Trump as an anti-establishment figure to kind of bargain their way through getting policies through that they like. Now, these inquiries are led on the grounds of apparent abuse of power, obstruction and corruption by Biden, which is in relation to his son Hunter Biden. Now, these proceedings should dominate the political agenda, taking attention from Trump's criminal proceedings as he runs for presidency in 2024. Now, we know Trump is being, kind of indicted by many states, many departments of justice in many states, for his actions around the election, as well as issues to do with his previous partners. So it'll be interesting to see how this might actually take away a lot of the heat that he's getting within the media and kind of pivot the media angle more on Biden. And of course, the White House denied wrongdoings, with the Democrats seeing this as an attempt to revenge following, Trump's impeachments whilst he was president. Now, the Republicans hold a wafer-thin majority in the House and don't have a majority in the Senate, so it will be hard to achieve any gains with this impeachment, which kind of allows us to, think about and kind of confirm the idea more so that this is kind of just an attempt to have a little bit of a stab at Biden and take the media attention away from Trump and put it more so on Biden whilst Trump's going through this tough time in courts. Now, if achieved, however, it will be the third time in less than 5 years that a president has been impeached. And we know that prior to this, only 4 presidents, only 4 times has the impeachment been used. So this kind of increase in the use of impeachment is showing this deepening of political polarization within the country. Now, Republicans will try to prove that Biden was involved with his son's dodgy business deals over the years, despite any evidence to show that to be the case, which further reinforces that idea that this more is just a political stab at Biden. Now, some Republicans disagree with the probe. However, some Republicans also have threatened to vote against Congress's approval for funding on the 30th unless it's pushed through. Now, basically every single not September, I think, but there's kind of a yearly budget for Congress, and if that budget is not passed through Congress, we experience something called a government shutdown, where federal departments are closed for the day, and basically people go out their jobs on the thousands just for one day, or for however long it takes until a negotiation's achieved with the two parties, within Congress on what the budget should be, and they're kind of using this as a bargaining chip, at least the MAGA Republicans, as a bargaining chip, and saying, we won't vote this through unless you basically give us what we want. And so it'll be interesting to see how this will play out and whether a government shutdown will actually take place, despite the fact that Kevin McCarthy has gone through with this. Sorry about that, by the way. Now, the third article to talk about really is this one in relation to the EU and voting on, how much should the EU's energy production come from renewable energy by 2030, with all these energy targets coming out recently and last year, and that kind of being the focus of many countries. It's interesting to see how the EU is shaping up their policy. Now, EU lawmakers have voted to increase the bloc share of renewable energy to more than 40% by 2030. Now, along with that, they voted to loosen permitting producers. So just as solar and wind power groups warn they're at risk of insolvency as a result of fierce, competition with Chinese companies, they're kind of seeing this loosening of, the laws around what can be permitted to produce renewable energy and where it can't be produced, And along with that, the increase took the share of renewable power in the EU's energy mix from 30% target to a 42.5% target by 2030. So it is a big increase. Now, the agreement on the target was reached after concessions on nuclear power, and that the outcome was met with applause after nearly 3/4 of lawmakers voted in favour, with the majority of those opposing being hard right leaners within the EU. Now, after permitting procedures reform, national authorities should now only take up to 2 years to approve renewable projects. And this is, coming off the back end of, where 130 gigawatts of renewable energy projects await approval within the EU. So there's still this massive amount of energy which could be produced with these projects, but because it's taking so long to pass through the EU, they're not kind of being worked on, and this is what the EU is trying to combat by changing the permitting procedures. Now, this comes after the meeting of the leaders of the G20 economies, which agreed to the goal of tripling renewable energy capacity by 2030. So, we spoke about that in New Delhi last week and this Monday. But this is kind of, the whole world coming together, at least the top producers of, poor emissions. They're all kind of coming together and trying to make better of this situation and kind of fix this, global environmental issue. Now, however, after this meeting, it is the one downside to it is they did fail to set a timeline for the end of fossil fuel use, and this is kind of unsurprising considering that within the G20 we do have, despite large economies, they still are kind of emerging economies such as India and China, which do use a large amount of fossil fuels still. And even with the US, with the right kind of growing their issue with renewable energy and, pushing for more, fossil fuel use and that sort of thing, we're kind of seeing, a lot of these economies be wary of actually fully zoning out all fossil fuel use. And so it's likely that this will stay the same for a while until, a kind of agreement is made to how they'll actually get rid of fossil fuels and what will really replace it at a cheap cost, because a lot of these renewable energy products are still being subsidized, especially in these bigger economies such as China and the USA. Now, it seems there's a broader trend of member states within the EU also seeking carve-outs from the energy climate laws, which affect their individual energy mixes. And we saw this with France, as well as other countries such as Poland, which we'll speak about in a second, but especially with France, that produces a lot of its energy through the use of nuclear energy reactors, which aren't renewable and produce a significant portion of nuclear waste, and so this is kind of disliked by other countries such as Germany and other nations within the EU. And so concessions are sort of having to be made within the EU to kind of deal with everybody's energy needs differently and their situations differently. With Poland suing the European Commission over regulations they argue threaten its energy security, because we know a lot of arguments kind of came out of energy security following Russia's invasion into Ukraine, where everyone kind of in Europe kind of stopped a second and went, wait, we're not producing enough energy to be self-reliant and not rely on these, tyrants like Russia. But that's all for the articles. We now move on to the charts, where there's lots to talk about. And firstly, we'll come back to Brent crude oil, but firstly to talk about is the US 30, along with the the Nasdaq, and as well as that the S&P 500, with all US indices really dropping following Republicans launching that impeachment probe. Because obviously, as we understand, anytime there's kind of US political instability, it's likely that indices will drop, with people kind of losing their faith in the market's integrity and ability to stay stable with growth. And so we've kind of seen, despite this retracement and then growth again from these Fibonacci areas, especially on the US 30, we're now kind of seeing this stall following that impeachment probe being introduced. And we're also seeing that on the US 100, which is taking a decline after kind of pushing back after that retracement, and the same as that on the US 500 and S&P 500, which kind of bounced off that 50% Fibonacci area, but now it's kind of consolidating, coming back down following that impeachment probe. But next to talk about is the dollar, of course, which we've been speaking about a lot recently, just because it's shaping up really nicely on the charts, really, with a lot of macroeconomic news coming out. Now, we spoke about this, this area here of there being, this is where the dollar had its highest high prior to this breakout, and so we talked about how it would be a likely area for the dollar to come down and reach again if the news kind of collaborated with that. And along with that, we kind of saw a push down out of this bearish price action, breakout from there, kind of touched it again, but moved down to this area before taking a move back to the upside, where it reached a area of liquidity, as we can see here, a few wicks going up into this area, and then took another move to the downside, where we've seen two bearish engulfings. And now I would be approaching this situation thinking, right, so this kind of area is bearish. It's signaling to me, very bearish. We had this RSI overbought kind of action being presented, as well as the price action that's being shown, and now we're seeing a breakout from that area. I'm thinking it's going to move down a bit as it's retracing, but how can I get on the upside of this? Because obviously the macro fundamentals is still positive for the dollar. We're expecting rates to stay high for longer, and a possible rate increase in November. And so I'm still thinking positive on the dollar, but get a good price for it. So where I'd be saying positions would look good is around this 38.2 area, or better even the 50% Fibonacci retracement area. And so that's where I would kind of have long positions if I was trading. Now, that's all for the dollar on its own, but still staying on the topic of the dollar, we're to talk about the Euro USD. Now, I spoke about recently kind of this area of liquidity that I thought it'd be likely with the ECB interest rate decision coming up on Thursday. I thought it'd be likely for the euro to kind of come up and touch that area before maybe moving down to this other area of liquidity. Now, what did we see? Well, we saw the euro come up and punch into this area of liquidity, as it's likely that this is where banks are kind of gaining their shorts in a way to hedge for the ECB's interest rate decision. And so in this kind of time, in the lead up to it, we're kind of just looking for areas where banks are trying to get their long and short hedges in on the market so that they're protected going into this ECB interest rate decision, because when it does take place, the market will clear and there'll be great volatility, and so it's about the banks trying to protect their positions. Now we're kind of revisiting that area of liquidity right now, but I doubt it's going to push higher in the lead up to the interest rate decision, where we often see assets consolidate or kind of push down and push up to trying to find liquidity, as we saw here. So keep your eye on euro dollar. Now the next to talk about is euro yen, which I think is in a really interesting short position place. We've had a lot of yen data really actually come out this week, or at least last week, and generally, we've got US inflation rate coming out today, and so for me, this is a nice short position depending on the inflation data coming out, just simply because we've kind of had this large bearish engulfing push down to the downside after kind of pushing out from this area of consolidation. We've pushed up, we've now pushed back down, kind of hunting for liquidity here and hunting for liquidity on the triple top up here, and now it's kind of retracing to the upside to maybe come down a bit further following inflation news. But obviously with inflation news coming out, you can't be sure of how the charts will move, just going off a technical analysis base. But if I was getting shorts based off inflation data, this would be the ideal position, just because of its position in relation to liquidity. As you can see here, prices pushed up into there a few times and pushed down into there a few times. So it's likely a lot of orders have been placed there, and so it's a good area to get in positions. As well as that, we've got this 61.8 Fibonacci area. So to me, that looks like a good short area depending on inflation data. Now, talking of Bitcoin, we've kind of been consolidating for a while with these volatile movements, the upside and downside, but generally it's staying within this zone of 26,000, and it's kind of been ranging. As I said, it broke below this area of liquidity which I spoke about, but it turned out to be a false breakout, and so this liquidity, this area of what could have been resistance, did not end up being actually effective to Bitcoin, and so we just saw a break back up to the upside. So we're likely just to see price continue to consolidate around this area as the SEC continues to make its decision on whether Bitcoin ETFs will be formed. And so I think we're just likely to continue to see push to the upside with these small areas of market manipulation, where it's obvious that people have pushed for manipulated prices to get better long positions, like here, where it's taken out all the people on their buy orders, where their stop losses might have been below all these lows before pushing back up into these this area of consolidation, and getting the best price for themselves. So keep your eye out on Bitcoin with a lot of manipulation going on. Next to talk about is gold. Obviously, we've been speaking about gold, but not much has really happened. But now we've kind of retraced finally down to this 61.8 area. And so if I was kind of looking for buy positions with, this new political issue on the edge, to do with the Republicans investigating Biden and his affairs, I think this would be a good macro long position in relation to that, just simply because gold ends up being used as a safe asset during these times of political instability. So generally we might see long moves take place as a result of that. And so this 61.8 area is generally a good area to get in, based on the Fibonacci, along with some areas of liquidity that's clear around this area, as we can see, push down into here, wick up into here, and lots of buy positions have previously been gained around this area. So that's where I'd be looking at for a long position on gold. But next to talk about, of course, is Apple. So keep your eye on the charts in relation to Apple, with this new release coming out. Post markets is still around the area that it did close at, but it'll be interesting to see how the market actually gaps with the new release, and whether it will go to the upside or the downside, depending on consumers' impressions of it, and whether how it might react with the holiday season coming in at the end of this quarter. So that will be very pivotal for Apple. So keep your eye out on Apple's revenue, as well as just the charts in relation to Apple for potential buys or shorts. Now, finally, to talk about is Brent crude oil, which we've been talking about a lot recently, but mainly based around that article to do with the Saudi government kind of pushing for $100 a barrel oil. And we kind of spoke about this area of strong resistance that's been existing following Brent crude oil's rally. And we've kind of spoken about that if it does break above, it's a likely area where, you know, price might try and retest to continue to the upside, where it might reach $100 a barrel oil at some point. And so I've kind of highlighted this area here, which we've been speaking about for ages, really, as a potential buy opportunity area, with the 50% fib coming in here. So to me, it does seem like a high probability area to the upside, because often after these kind of rallies and breakouts, it does retest the same area that it broke out from before moving higher. But that's it for the charts. Now to talk about you know, our economic calendar for today, and I'll just refresh that here. And yeah, there's lots to talk about on the economic calendar here, but we're going to try and, you know, pick out the most important ones. And the first being Japanese wholesale inflation is being released today, along with the UK's GDP growth, as well as that the UK's balance of trade figures are being released, and along with that the UK and EU industrial production figures are also coming out, and that'll be interesting to see, especially to do with the euro, considering that you know, there's been industrial decline in Germany and thus the EU more recently, as well as that US mortgage rate and applications data is being released, along with that the US core inflation rate being released, as well as the normal US inflation rate, and as well as that, and finally you know, the US monthly budget being released. But that's all for today. If you have made it this far, please like, please subscribe, and check out our socials in the description. Thank you so much for watching, and I'll see you in the next video. See you later. Bye.